So what are three things that everybody needs to know about the labor market right now? So I'll talk about that in just a second. This is Jeffrey Roach, Chief Economist for LPL Financial. And so number one of three, openings are slowing. So you look at the number of openings per unemployed person in the United States right now, and we're at that ratio of roughly 2-to-1. 2 openings to unemployed. Clearly, that's unsustainable. It's much higher than the historic pre-COVID levels, and we're actually starting to see that ratio go down. So you could say, well, what's the best way to see that decline? Well, there are 2 ways for that ratio to decline. We're talking about openings to unemployed. So you could either have the number of openings go down or the number of unemployed go up. So if you wanted to answer the question, well, what's the best way to see that? Well, clearly you would hope that the number of unemployed folks would increase, meaning we need more people come off the sidelines, back looking for work, and we would actually see that ratio go down closer to 1. So the second thing you need to know about the labor markets right now is that the reason why businesses are increasing layoff announcements and cutting jobs is the fact that businesses are cost cutting. So if you look at this graph, and it actually tells you the reason why businesses are increasing these layoff announcements. And what I think is fairly encouraging, somewhat of a silver lining, is that the fact that firms are not responding saying, hey, demand is falling, or our economic outlook is deteriorating, and that's the reason why we're cutting jobs or announcing layoffs. No, it's rather businesses are saying, hey, look, we want to be more efficient. We want to cut costs. Perhaps we're gaining in productivity and efficiencies elsewhere, and we're announcing layoffs because of cost cutting, not because of a decline in the outlook or in demand. So the third thing you need to think about right now, and you need to know about the labor market, is that the labor market is strong enough for the Fed to continue its tightening cycle. So as you noticed in recent speeches, Fed presidents are talking about the fact that we know real estate is slowing. We know certain aspects of the economy are slowing. The global economy is slowing, but the labor market seems to be strong enough to offset some of these weaknesses in other areas of the economy. So therefore, you look at the labor market and you realize the labor market still is strong enough and stable enough to allow the Fed to continue to hike. So the real question now is, what's the lag between the action taken by the Fed and the impact felt by the real economy? We should know that there is a lagged effect. So it's possible that these rate increases from previous meetings have yet to be fully felt into the real economy, and it takes some time for it to ripple through. So that's the whole point of the front loading. How much time will it take? Well, one can argue that the transmission is a little bit faster than it has been in previous cycles and in previous decades. And so because of that, since the transmission is faster, we could start seeing a real probability that the Fed starts downshifting its hikes from 75 basis points to 50 basis points. So all eyes on inflation right now, and before the Fed meets the next time around, we will have some more inflation stats to give us a little more color. But here are 3 things that everyone ought to know about the labor market.